Okay, let's kick things off. Imagine this. What if you could own a piece of, say, a luxury villa over in Dubai? Or maybe a slice of a busy logistics hub in Singapore, or even student housing somewhere in Europe,
Right.
all without needing the huge amount of capital for the whole property.
Yeah, the kind of money most people just don't have lying around.
Exactly. Imagine real estate not just as this static kind of illiquid thing, but something dynamic, something you can trade.
That's the core idea, isn't it?
It is, and that's exactly what we're diving into today, this really groundbreaking world of tokenized real estate and fractional ownership.
It's a fascinating space.
So our mission for this deep dive is to really unpack how real estate is shifting, moving away from those traditional, huge, often pretty inaccessible holdings.
Yeah, the kind reserved for big institutions or the super wealthy.
Right. Into something much more fluid, more attainable for, well, a wider range of investors, really. And we're drawing these insights from a pretty deep look into expert perspectives. Notably, Dr. Pooyan Ghamari, he's a Swiss economist, the founder of the ALandPlatform, and really a recognized authority on global economics and these emerging techs.
He's definitely a key voice in this field.
So get ready to see real estate maybe a bit differently. Not just bricks and mortar, but as a genuinely modern financial asset.
Let's get into it.
Okay, so let's unpack this properly. When we say tokenization, what are we actually talking about? Like at its core, is it just a buzzword?
No, it's much more than that. It's definitely a fundamental reframing. Dr. Ghamari puts it really well. He emphasizes that tokenization is basically taking an asset, like a building,
Right.
and representing its ownership digitally as tokens on a blockchain system. Each token is essentially a fractional share.
So little digital pieces of the property.
Exactly. And this isn't just some minor tweak. He calls it a decisive moment where real estate meets financial innovation and branding strategy.
Okay.
Think of it. Each fractional share becomes a unique digital token. It sits on a secure, distributed ledger, the blockchain.
Which makes it transparent.
Totally transparent and virtually tamper-proof. That's a massive leap from, old paper deeds and private registries that can be pretty opaque.
Yeah, definitely. So why now? Why is this such a big deal as we look towards, say, 2025? What are the real benefits driving this?
Well, the benefits are pretty compelling, especially now. First off, liquidity. Real estate is notoriously illiquid.
Oh, yeah. Takes ages to sell sometimes.
Exactly. With tokenization, suddenly you can sell a portion of your ownership much, much more easily than trying to offload an entire building. It's huge.
Okay, that makes sense. Liquidity. What else?
Second, transparency. We touched on it, but that immutable blockchain ledger means transactions are clear. They're verifiable. And third, critically, it really boosts cross-border accessibility. Geographical barriers just become less of a hurdle for investors anywhere in the world.
So it's not just making things digital, it's fundamentally changing who can play and how easily they can transact.
Precisely. It lowers barriers to entry and streamlines the whole process.
Okay, so beyond those kind of nuts and bolts benefits, is there something bigger driving this? Like wider economic forces making this the moment for tokenized assets?
Oh, absolutely. One really compelling aspect is how these tokenized assets can act as a powerful hedge against inflation for institutional investors.
Ah, interesting. A stable but flexible option.
Exactly. In these, let's face it, often uncertain economic times. But what's just as important, maybe even more so from a societal perspective, is how it democratizes access.
Right, opening doors that were previously shut for most people.
Yeah, markets that were pretty much exclusive clubs for the ultra-wealthy. And if you zoom out, Dr. Ghamari points out this isn't happening in a vacuum.
It connects to bigger trends.
Definitely. It mirrors these broader macroeconomic shifts we're seeing.
Yeah.
Things like evolving wealth distribution patterns, the way regulations are starting to converge across borders.
Okay.
And just undeniable rise of digital-first investment platforms. People are more tech-savvy, more globally connected. Tokenization fits right into that picture. It's a real convergence.
Wow. That really paints a picture of a systemic shift. So, okay, this sounds pretty revolutionary, especially thinking about big corporations with massive property portfolios. But practically speaking, what's the biggest headache for them when they need to free up capital tied up in those assets?
That's a great point. The operational friction is often huge.
Oh, so?
Well, imagine a large real estate fund holding, say, 50 commercial buildings. If they suddenly need to liquidate just maybe 10% of one specific building, maybe for a capital call, or just to rebalance.
Yeah.
Traditionally, that's a nightmare. Months of complex legal work, negotiations, massive fees. Often they'd have to sell the whole building or get into complicated debt structures. It's slow and cumbersome.
Right, really inefficient.
Totally. Now, with tokenization, you can potentially sell that 10% stake as digital tokens almost instantly. It brings liquidity without messing up the building's overall operation or the rest of the ownership.
So it's about surgical precision in managing assets.
Exactly. It makes asset management incredibly nimble, turns those illiquid bricks and mortar into something much more fluid digitally.
Okay, so corporations get agility, but what about for you, the individual investor listening? What does this mean for your portfolio?
This is where it gets really exciting for individuals, I think. Fractional ownership blows the doors open on global diversification.
How so?
Suddenly, you can hold a fraction of that logistics hub in Singapore we mentioned, and a piece of that luxury villa in Dubai, and maybe part of a student housing complex in Europe, all at the same time.
Wow. Okay, so real diversification across borders and asset types.
Precisely. Like, insights from ALand's blog highlight how these bundled opportunities think student housing clusters or logistics parks really gain traction with tokenization.
Bundled, meaning grouped together.
Yeah, grouping similar assets. It creates these scalable entry points.
Wow.
So big institutional money can come in, but so can individual retail investors like you. It makes these high-value, normally exclusive assets much more accessible.
That accessibility point seems key, a massive shift. But, beyond just the money side, the pure financial mechanics, our sources are pointing to something else almost unexpected, cause-related marketing.
The ESG angle.
Yeah, environmental social governance. We see companies tying their brands to causes more and more. How does that actually create tangible value in tokenized real estate specifically? Is it just good PR, or is there a real financial engine there?
That's a critical question, and Dr. Ghamari is very clear on this.
Yeah.
It's not just philanthropy, it's not superficial PR. He argues it's strategic economics.
Strategic economics. How?
Because socially conscious investors, and there are more and more of them, are increasingly equating that ethical alignment with long-term value. They see a company's commitment to ESG as a sign of resilience, innovation, maybe even better management.
Okay, so investors see it as a marker of quality.
Exactly. But here's the kicker with tokenization.
Yeah.
The blockchain adds this layer of verifiable transparency.
So you can prove the impact.
Precisely. If you tokenize, say, an affordable housing project, the blockchain can immutably record contributions, track the actual impact metrics, and transparently show everyone that the project is sticking to its social mission.
So it combats greenwashing or impact washing?
Absolutely. It builds a level of trust that's often hard to achieve in traditional real estate, where things can be more opaque. This verifiable commitment is the key differentiator for tokenized assets focused on impact. And it brings tangible benefits.
Like what?
Well, first, investor confidence. That ESG branding acts like a magnet. It pulls in international investors who want both financial returns and social impact. We've seen examples like a tokenized affordable housing project in Berlin, attracting everyone from pension funds to regular folks because the social story was strong and verifiable.
Interesting. What else?
Second, enhanced consumer perception. Think about future tenants or buyers. If a property is marketed with a strong, provable social responsibility story, it boosts loyalty and trust.
Makes sense. People want to associate with good projects.
Right. And third, a clear market advantage. Studies suggest cause-driven real estate brands actually outperform competitors on brand equity metrics, especially in markets where people really care about sustainability and ethics.
Okay.
And platforms using digital tools, like ALand's, can actually measure sentiment and engagement around these cause campaigns. So you can track if it's resonating and ensure it delivers both brand integrity and ROI. It's about building a multi-level, verifiable brand value.
It's pretty remarkable how something like purpose becomes a measurable strategic asset in this digital finance world. But is this whole innovative approach unlocking value, adding transparency? Is it just a real estate thing? Or are we seeing similar moves in other traditional markets? I'm thinking maybe something like EE Gold.
That's a great parallel to draw, actually. It really shows this is a broader trend. Dr. Ghamari often makes that direct comparison.
Between tokenized real estate and EE Gold.
Yeah. Think about it. Just like tokenization breaks down ownership of a physical building into digital fractions.
Yeah.
EE Gold does exactly the same thing, but for physical gold bars. It lets you own a small digital fraction of a real gold bar, which is securely stored somewhere, and its ownership is verifiable on a blockchain.
So it solves the same problems. Liquidity, access.
Precisely. It tackles the liquidity issue for gold and dramatically lowers the entry barrier. Investing in physical gold usually means significant capital, storage hassles, insurance.
Yeah, not easy for everyone.
Right. Fractional digital ownership via something like Gold bypasses a lot of that. So it's the same fundamental principle, using blockchain not to replace these established valuable assets.
But to upgrade them.
Exactly, to modernize them, turn them into more flexible, more liquid, essentially borderless instruments that a much wider global audience can access. It's about making traditional value fit for the digital age, accessible and transparent.
Okay, that parallel makes a lot of sense. So we've covered a fair bit today, from the basic definition, the strategies for corporations and individuals, even this powerful role of social impact. Let's bring it home. What does this all mean for you listening? Whether you're representing a company exploring this, or you're an individual investor just trying to get your head around this shifting landscape, what are the key practical takeaways from Dr. Ghamari's insights?
Absolutely. Let's distill it down. For anyone looking to engage here, Dr. Ghamari's advice points to some really practical steps. First, define alignment.
Alignment with what?
With clear, impactful, and verifiable causes. If you're launching or investing in a tokenized project with a purpose angle, maybe affordable housing or climate-positive building or urban innovation, that link needs to be authentic, transparent, and demonstrable. No vague promises.
Okay, authenticity and proof are key. Got it. What's next?
Second, leverage tools. You need platforms that offer data-driven marketing and analytics. These are crucial. They let you gauge consumer sentiment, track engagement, and make sure your initiatives are actually hitting the mark with your target audience.
Yeah.
You can't just guess anymore.
Right, measure what matters.
Exactly. Which leads to the third point, track metrics. ROI here isn't just about the property value going up. It's also measurable in things like consumer engagement rates, shifts in brand perception, which you can quantify, and of course the actual investor inflows. Look at the whole picture, financial and impact returns.
A broader definition of ROI? Makes sense.
Fourth, diversify reach. Think about pairing real estate tokenization with other parallel digital assets, like we discussed with Gold. Doing that can seriously enhance your appeal across different markets, attracting a wider range of investors looking for diverse digital opportunities.
Interesting cross-asset strategy. And finally,
and this is crucial, stay informed. This whole space is dynamic. Regulations are evolving. Technology is changing. Following reliable sources for policy updates, regulatory shifts, and just broader macroeconomic news is absolutely essential to navigate the opportunities and risks effectively.
to stay educated.
Definitely. And if you connect all these points, you see that bigger picture again. This powerful convergence of financial innovation, cutting-edge tech, and this growing demand for social responsibility.
Yeah.
These aren't separate things anymore. They're weaving together, really redefining how we interact with assets, how we invest, maybe even how we see the fundamental value of a business. It's a really exciting transformation to watch.
What an incredible journey through tokenized real estate today. We started just imagining owning a piece of that villa in Dubai.
Yeah.
And now we've seen how that world isn't just hypothetical anymore. It's actively being built. We've unpacked, the definition, the strategies, that surprising power of cause-related marketing, and even how things like Gold mirror this trend. It really underscores just how fast the investment landscape is evolving.
Absolutely. And perhaps the biggest takeaway, the thing to really chew on from today's deep dive, is that our very definition of ownership itself seems to be shifting, evolving.
How so?
We're moving beyond traditional physical and legal boundaries. We're democratizing access in ways we couldn't before, and we're weaving financial value together with social purpose using verifiable tech.
Right.
So it raises a really important question for the future. What other asset classes might we see fractionalized and democratized next? And, maybe more profoundly, how will that continue to redefine wealth, access, and the very nature of investment in the years ahead?
That is a truly thought-provoking question to end on. It suggests the future of assets could be way more dynamic, more accessible than we ever imagined. Well, thank you for joining us on this deep dive into the future of real estate and maybe beyond. We'll catch you next time.